And I know that most people aren't in Miami until October 1st because of the weather. But this was sort of, I'm on my kind of tour to promote the fund. I mean, some of you might have been here a month ago when I was catching Vineet Butke on the road for his fund, which is a very different fund. It's a venture capital fund, and it's everything but Bitcoin, right? It's basically trying to, if you look at like 3 different areas, there's Bitcoin, which is a major asset class in crypto, which is what I'm going to talk about next. There's altcoins, and the ones that are on DEXs is the world that Marlon lives in and I think is going to master. And then Sigma Capital, that I'm a general partner in, is sort of the early stage opportunities when they're still at the early equity stage, like Marlon is here. And Vineet's track record when he was at his last fund turned 30 million into 200 plus in about 3 years, and that's why I got involved. So I have been a LP in about 6 or 7 funds over the last few years, and a GP in 4. And but I've always been a minority GP, including the first fund that I got involved in the first quarter of 2014. It was the BitAngels Fund 1, also known as the DAPS Fund. The majority chief investment officer was David Johnston, who's my co-founder at BitAngels. And his thesis was go out on the road, find great projects, and invest Bitcoin in them. And so we only raised in Bitcoin. We raised in Bitcoin, and we raised 10,000 Bitcoin. It's been a lot now. Back then it was $6 million. But fortunately, we spent $1 million of it on the Ethereum ICO at 30 cents. And we had a couple other winners, but obviously Ethereum was the unicorn. But again, I was not the chief investment officer. So this is the first time I'm going to be the chief investment officer in a fund, and I was compelled to do it because in writing the book, which has been years in the making, the reason I wrote this book, which came out last November, I spent most of last year writing. Thank you to Miss Joyce, wherever she is, for supporting me in this. I literally was writing this after having eye surgery and barely being able to see the keyboard, and she kept me going. And so I finished it. I wanted to release it because my publisher, which is Skyhorse, which also has the Melania book. They've had about 400 number 1 bestsellers on the New York Times list, as well as many, many more on Amazon. Tony Lyons has become a friend. They're distributed by Simon & Schuster, but why I chose them over other publishers was their time frame. They publish a lot of political books, which means speed to market, right? And I had a lot of other publishers said, oh yeah, give us the copy, we'll get it out in a year. And I'm thinking, a year in crypto is 10 years in everything else, right? You don't want to be going and putting a book out now and your insights look stale a year from now. 3 months I could deal with. And so I finished the book in August. I wanted to wait until I heard what Trump had to say last year at the Bitcoin 2024 conference in Nashville. And and then I basically projected that we were going to hit the all-time high, the new all-time high, which is what I call the first day of Bitcoin summer, in November if he won, and late December if Camel won. He won, and the all-time high was November 5th. So I looked very Nostradamus in the book. And hopefully as the cycle progresses, I look even more and more so, because I basically laid out how things are going to look this cycle, and I project how they're going to look for the next 20 years or so. So really quickly, I'll just talk about the thesis of the book and why I wrote it. I wrote it because I got into Bitcoin in 2012 and then started getting in heavily in 2013. And in the summer of 2013, when the price of Bitcoin was $66, I spoke in front of a crowd of about 100 people at the New York Angels, traditional equity investors, open to new technologies. Most of them would think nothing about YOLOing 50 grand into some promising new nanotech startup, if other people thought it was cool too. And yet nobody, after I explained Bitcoin, at $66 now, I thought it was a life-changing opportunity that was going to become, at least $10,000 by the end of the decade, and obviously it did better than that. Not a single person bought. And the only comment that I got, because there were no questions, during it, even though I asked for questions. Any questions? Stony silence. They thought I was selling like, skin cream from Mars. And in the break, an older gentleman with a long, white-haired beard came up to me and said, "Son, I'm a retired professor of economics from Princeton. I know what I'm talking about." And I looked at this Bitcoin, and its only uses are drugs and prostitution. I suggest you run away from it as fast as you can before you're arrested. So that was Bitcoin perception in 2013 from very smart accredited investors. I wanted to change that, and so this is not Bitcoin for dummies. It's Bitcoin for, let's say, sophisticated investors who've been led down the wrong path. And because I had similar conversations when it was at $200, at $2,000, at $20,000, and now it's 100, and it's been over 120 this year. And so Bitcoin will be at $1 million. It's not an if, it's a when. And I'd say that's probably more likely in 8 years than 12, but no way it's lasting more than 12. And Satoshi in the white paper, which I reproduce in the book in chapter 5, I think it is, with my annotations, said early in the white paper that as long as the amount of Bitcoin that is bought every cycle, 4-year cycle, is more than the amount of new Bitcoin produced, price has to go up, right? Simple supply and demand. And the reason why it's so crazy up and down in between is because of human fear and greed. In any early market, you have fear and greed. In the petroleum market, it was crazy up and down in the 1800s because people were afraid it would never replace whale oil. That was like the banks of its day, Oh, whale oil, how are they going to replace whale oil? What is this thing? You get out of the ground, you got to do all sorts. I don't know about that. Obviously now oil is like much bigger than whale oil. And same thing here. I think it's inevitable that Bitcoin becomes bigger than gold. Eventually we'll start competing with real estate and other major asset classes. And, and so it's important, I think, for most people to have it in their portfolio. And the book shows you how to go in better than just hodling. So hodling is, this term that came from a post where this drunk guy talked about breaking up with his girlfriend, and he said, "I'm going to keep holding it." He misspelled it a few times. That's where the word hodl came, and I actually reproduce some of the non-X-rated parts of the post. It was very drunk and funny. And I think it was in 2010 or 2011 that he wrote that. And, if you hodled it, in the early days, you're a billionaire. But if you even hodled at the end of the first cycle, when the price of Bitcoin at the first halving was $12, and you put in $12,000, that's like half of what these YOLO 25K spray and pray investments in VC are in angel investing. $12,000, you held it to today, never sold, never bought anymore, never sold. It's worth $112 million today. Not a bad investment for 13 years. On the other hand, if you did what I recommend in the book, which is that you sold at the end of the high season, which every 4 year every 4 years has become more and more predictable. So I'm not saying you're ever going to pick the high date, although I've known people who picked it to the day. I picked it once or twice to the day. But if you're within 20% of the top and 20% of the bottom, you would have turned your $12,000 not into 120 million, but into close to 7 billion.
Oh,
because you'd have 60,000 Bitcoin times the price of today.
Wow.
And I think that'll continue for the next 3 cycles at least. And it may not be 4x again, but it could be, because right now you have this thing called diminishing returns that I talk about in the book. You basically had a 100x return from having to high the first cycle, but then an 85% drawdown the year that it crashed, which is always the year after the run-up. And in the history of Bitcoin, there's only been 3 years you could have lost money. 2014, 2018, 2022, and you're going to lose money in 26. You buy in January and sell in December. And retail, just like in the stock market, acts the opposite of sophisticated investors. They panic sell in at the top when all their friends are making money, and then they panic sell at the bottom when they say, "Oh my God, I've been scammed, I gotta get out." And that provides liquidity for guys like me, and hopefully you, that take advantage of that and buy low and sell high. Isn't that what you're supposed to do? I quote the patriarch of the Rothschild family, Lord Rothschild, who said several hundred years ago, he was the one that said this, you must wait until there's blood in the streets, and then you buy, even if it's your own blood. And that's worked in the stock market, it's worked in a lot of other markets that are cyclical. And again, I advocate, selling high and buying low. And I have the formula for that in here, and I have about 3 or 4 things you need to track. And then people said, well, why don't you do it for me? And I was like, well, I need a fund to do that. And so I decided to start one. And I did not want to start because I do other things. I did not want to start a fund unless I had great partners. And the great partners are the founders now come all over to the fund of Tradery Labs. That is an algo fund that it was actually algo developers that I invested in 2019. They started a small fund that was just basically for people who invested in the equity. They never really wanted to scale it until they got a gray-haired guy to go out and sell it to Wall Street. I guess I'm the gray-haired guy. Because I didn't want to do something on their original strategy, which is basically top 20 coins, mainly Ethereum, and they did well. They beat the price of Bitcoin over the years. But I thought that Bitcoin is the safest asset class, particularly compared. Look, Ethereum can still go out of business. Bitcoin can't. I think the odds of Bitcoin going to zero are now so far below 1%, it's ridiculous. On the other hand, Ethereum is getting copied left and right. They may end up outperforming Bitcoin for the next 3 months. Every cycle so far, and I talk about this in the book, they've underperformed Bitcoin for 3.5 years and then outperform it for 6 months. And so, if you want to go and take that risk, you could go in and, invest in Bitcoin and then swap out to Ethereum for 6 months and hope you get it right, because they can be very dramatic ups and downs in Ethereum, even more so. And now Solana's in the mix too. I'm making it simple. Bitcoin only. I'm going after, large family offices, large funds. So far, my largest commitment is actually from a Bitcoin treasury company. And, it's not for everybody in the room. The minimum is $250,000. I'm looking at raising $21 million for our first close. And then after that, the nice thing about Bitcoin is that it can scale. If I was raising, $100 million venture fund and I decided to up it to $500 million, I'd have to hire 5 times the number of people, or I'd have to put 5 times the money into each company. With Bitcoin, you just buy more Bitcoin. And that can be done with the current team, and maybe with the extra management fee, I'd, hire another quant, but that's about all I need. And so it's really simple. We have a deck now. We're going to be taking checks in about a week. All we're waiting for now is the final damn bank account. Everything else is approved. We got 2 bank accounts that sent 2 banks that said they're going to give us accounts, but they still have Gensleritis, I guess, case of Gary Gensleritis, even though Trump said they're actually going to penalize banks that stop you from Bitcoin. It's instead of a 2 in 20, it's a 1 in 25. I don't want to make all my money just sitting there and taking 2% and have you lose money. But the thesis of the fund is quite simple. Last year, 2024, the top performing hedge funds were all in crypto, but they still underperformed the price of Bitcoin. Pantera and Galaxy were, I think, 45 and 52%. Price of Bitcoin sitting in your wallet was 120. But those same funds all lost money in the down years because they didn't sell at the top. And the treasury companies are never going to sell. Saylor said it's never going to sell. And so next year you can be sure that that's going to go down in price. We sell, and that's our thesis. And we know when to sell. That's our thesis. And we always leave a little bit of a moon bag in case I'm wrong by a small degree. But that's it. And anybody who's interested can talk to me after. You're giving me a look. The dog's entertaining here. The dog may get locked in the room.
Sideshow.
I know. Just trying to keep everybody.
Any questions?
Yes. So what's
Yes.
the lockup period? How liquid is it? That's my first one.
Lockup is 6 months, and it's completely liquid because it's all in Bitcoin or cash. There's no illiquid investments.
Okay, 6 months. And how real is the threat of quantum computer?
So quantum computing is considered to be viable at about 20,000 qubits. We're at 15 now. Not 15,000, 15. It's a long ways away. And when it comes, I think there'll be multiple solutions that are all being worked on. Quite frankly, the simple solution is just, take your wallet and add additional protection layers. If you're, a 5 of 9 multi-sig on your wallet, that'll make it, 5 times harder to crack. And I think that if it comes, first of all, you have to not only develop the quant, which is largely people like Google, right? But you also have to have somebody who wants to deploy it for illegal things. I think, first of all, the easiest target is not Bitcoin, it's the banks. SHA-256, if it breaks Bitcoin, it breaks the banks. And the banks have a lot more cash, as Jesse James had said, that's where the money is, than going after individual Bitcoins. I think if it does happen, what it will do is it'll unleash all the lost tokens, and then people are going to fight over them. But I think that's years away, and that's, I don't think that's going to make Bitcoin go to zero or anything. Yes?
Are you still expecting the top in November?
November, December. We're looking at it, and technically it's been 9 to 11 months after the, she's read my book. It's been 9 to 11 months after the initial start of Bitcoin summer, which is when you have the high of the last cycle. And so that was November 5th, so a year would be November 5th of this year. But it's gotten a little bit longer every time. I would not think it to be unusual if it peaked out in early to mid-December. But I think that the tax situation is one reason why it has never gone into the next January, even though altcoins have.
Yes.
Altcoins, and I think your typical altcoin user is, some degens who are probably not figuring out how they're going to pay their taxes when they're, 24 years old and they just made $12 million on a meme coin. So I think we're going to have a very similar, it's going to be diminishing returns. I mean, we're not doing 100x this cycle. 100x would put you at, about $7 million of Bitcoin, so we're not going to do 100x. But I'm projecting 3x plus or minus macro, and 3x would be 193,000 from the halving. And I think we'll hit that, and I think we may end up hitting a little bit more. And the driving force right now is all the money going into Bitcoin treasuries. That is the new newbie. They're not people, in the last 4 years, the new newbies weren't even buying Bitcoin, they were buying Doge. It's true. The Q2 earnings in 2018, from Robinhood showed that 60% of all tokens bought were Doge. So that was more than Bitcoin and Ethereum combined. That's not going on right now. Right now, your newbies are, they're not 25-year-old, degens. They're, 40-year-old married couples looking in their 401k and looking at their portfolio and looking at the cash they have that's been generating, 0.5% and saying, can I do better than 4.2, which is going to start going down on T-bills. And, it's now safe to come out and put money into Bitcoin. And again, Bitcoin has never had I think if you hold Bitcoin for 5 years, you only have a 1% chance of losing money. And in 10 years, you have a 0% chance. And so if you have a long-term horizon of, being someone that's 40 years old, it doesn't need to go and, sell it in 6 months. You're always going to make money without selling. But, I think that the facts have proven that if you sell high and buy low, and you don't have to go and day trade, right? I mean, if you're DIYing or you're doing the fund, you just do it twice every 4 years. You can be asleep for the 3.5 years of the cycle and still end up doing 3x returns.
Michael, what about governments? Miami-Dade County has a $400 million deficit crisis that we in. The last time, the other night at the budget meeting, I went down, as a public servant.
Sherman Boger, everyone, give it up.
Are you gonna say? After service. But I actually ordered a few of your books to give to our commissioners right, to just kind of give a more academic, a more trusted white hair salesman as far as what's happening. But I went down on the floor during the budget hearing and I said, everybody's talking about cuts and adjustments to those cuts and the pain that they cause. Nobody's talking about innovating, income. And so I actually spoke with Michael Saylor, and then, of course, with you and your wisdom and guidance. And I announced that we're trying to raise $1 billion in tokenized public debt for Miami-Dade County. Plug that $400 million hole, roll the rest into a municipal strategic Bitcoin reserve. And if we know what we know and we believe what we believe, can you talk about is what we're proposing to do that far-fetched? Or
well, I was going to say, Saylor proposed that for the U.S. government, that the U.S. government is very good at selling T-bills, and he proposed a 2.1 trillion, because it's 21 million, a $2.1 trillion T-bill offering that would be in bit bills, and of the 2.1, they would take, I think it was 600 million of it, and buy Bitcoin, and the rest would just go for normal purposes, and the rest you could not sell for 20 years. And if it hit his projection where we'd be in 20 years, it would pay off the entire debt. Because again, you'd be buying it like, 100-ish thousand, when he proposed it. And in 20 years, he thinks we're gonna be, somewhere around, $5 to $10, million per Bitcoin. And, I don't usually like to project out that far, but I certainly think that, I think we will be, if not 1 million, just short of 1 million in 8 years. And so if you're going to 20 years, I don't know if it's going to be 10 million, but certainly I think 5 million is reasonable. And how many other investments in 20 years can you do 50x on with pretty good reliability? And there's still people who think it's going to zero. Peter Schiff does, but he's just going like, gold beat Bitcoin for like the last 3 months or whatever, but oh well. Every other period of one. Yes.
Hey Michael, what are your thoughts on Bitcoin staking strategies or yield strategies?
Sure.
For what you're doing?
I'm not doing any of that in the fund because we want to go and hold either Bitcoin I think we can do better with algo traders doing position-sized leverage, and also we're going to do light leverage, probably 70%. And our back testing on that showed us basically doing 200% performance over a 2-year period on the price of Bitcoin. And you add that to the 2.5 to 3x we expect to do from just basically selling at the top and buying at the bottom. So right now the best I've seen is about I think Babylon's 0.5% interest. I think you can get about 4% if you include. I'm an advisor to Cordell.
Yeah, that's what I was thinking.
They're probably the best one out there.
Yeah.
I'm also an advisor to Goat, which is also in the top tier. They approach it slightly different ways. Core has its own token. It's an interesting strategy, but I don't think you need to be paying 2 and 20, or in my case 1 and 25 to do that. You can do that on your own, and you can also do it through a separate fund that just does that. But your upside is you're just basically hodling with a potential 4% additional. It's kind of like doing T-bills for Bitcoin.
one more, Mike.
Yeah.
What you mentioned kind of earlier is that pretty soon Bitcoin could rise to actually rival real estate, right?
Well, that's Saylor saying that. I think it's definitely going to be gold in the next 20 years. Real estate's a little bit farther up the curve.
Well, I'm going to say I went to spoke at Token 2049, and I've seen a number of real-world assets and tokenization. And people say, imagine if you could buy, a piece of a building in New York or what have you. We have right now Dr. Michelle Lilly, who's actually the owner of Tokenized Assets and actually Tokenized Assets Miami. Me and her are partners with a little project called West 11. And so if you're not familiar with Miami, 11 is one of the premium brands here in Miami. They're the number 2 highest grossing club, period, in the world. But they partner with Airbnb, Mr. Roberts, the Simpkins family, which are clients and friends of ours, as well as PMG Group. And so.
And they had an NFT too.
Right, and so we're the only tokenized ultra luxury real estate asset program in downtown Miami, which I have to say because I'm the cryptocurrency chairman, I know, and the only ultra high net worth one. And so I want to know, what do you feel about the cycle of Bitcoin rising with actually the viability of Michelle and I's projects for tokenized assets? And
So
Michelle,
I think that tokenized real estate follows the real estate market, and so it's not going to be as good returns. I mean, right? It's not crypto just because you tokenize a piece of real estate. It's going to be the price of real estate, and so I think that the main reason why you want to tokenize an iconic property is to have access to it, and I think that it'll be as much a social exercise as anything else. So in other words, you own 1/10 of 1% of the building, you get certain club benefit memberships, and if they ever sell, which I doubt they will, but if they ever sell, you end up getting your pro rata, but you still get real estate returns. So I think that it's a very different proposition than Bitcoin.
but the kind of like advertising of the entire kind of space, like tokenization.
Maybe I'm sort of like kind of against the crowd. I think that tokenized real estate is extremely different, and I don't think that people tokenizing real estate makes Bitcoin any more or less valuable. It's a completely different asset class.
Yeah, I agree. Yeah.
So
What is the payout period with your funds?
it's perpetual. You can keep it in there for years. I mean, it's a liquid fund. You can, after the 6-month lockup, you can cash out, for income every quarter if you don't want to roll it. Okay, thank you very much. Thank you. A lot more food and wine, and no one's kicking out anytime soon other than maybe Joyce. This is the kind of a content part of the evening, and so I'm going to start introducing Marlon even before he gets here. So I've known Marlon Williams for about close to 10 years now, and he was early on a lot of projects. He was I helped launch EOS back in 2017. Woohoo! And and that was tremendous technology, and it spun off a lot of other interesting technologies as well. And so Marlon was early in the technology at EOS, and then he was a co-founder of Telos, which was one of the blockchains that solved a lot of the problems that EOS, EOS launched, raised a bunch of money, and then basically said, okay, the community can develop their own stuff. And kind of kept the money, but it was in the terms and conditions. And Telos was very successful. I ended up investing around $0.015, and it went to $1, so that's a pretty good return. And then Marlon and I became friends, and
$1.20 something.
$1.20 was its high, yeah. I only got on around $1, but that's okay. It's still alive too, even though the founders have all moved down and it's a different team, but the technology still works. He then did Starter Labs, which was one of the first. He also did some cool stuff in the call center space that hopefully get spun off sometime in the future. He was really early in being able to sort of figure out how to automate call centers where you would basically go and the phone would ring and someone would answer it, and you'd only pay them for when they were actually online, and you get paid by crypto, which I think stablecoins are probably the pivot now. But at any rate, Marlon is a genius at coming up with business models as well as then being able to execute it because he's a tech founder. And I've been his sounding board for a few years now. He'd be like, what do you think about this? I go, I don't know. What do you think about this? I don't know. And then when I heard about AI Quant Labs, I was like, yeah, that one's got legs. And I will turn the room over to Marlon to talk about what he believes will be the most profitable business that I've ever been involved with.
So Michael is referencing something that I actually said at BitAngels presentation. It was earlier this year. I have no choice but to come through and with my commitment. But like Michael said, I've been building in the blockchain space for a while. But prior to that, I actually started coding. I went to Miami-Dade College down the road since 2001. And so I grew up here. I was born in the Caribbean and was raised in Miami since 13 until I moved to Atlanta during the pandemic. So Miami is always home. I love coming back here. But I've been coding for a long time, and I love, I think, seeing into the future a little bit. I was one of the first to create electronic medical records back in 2003. That company was acquired in 2008. I was about 26 years old then. So that was the first sign that I think I know where to build and to find opportunities specifically in software development, which is something I absolutely love to do. And I this isn't my favorite part of the job. My favorite part of the job is being behind the computer and actually building and making things work and coming up with ideas. But it's a necessary part of the job that I've grown to love. And so I'll get straight to where I see the opportunity today at the intersection of crypto and AI. During the pandemic, I founded the Atlanta Blockchain Center as an incubator. So we've been incubating companies for the past 3.5 years. And towards, I'd say the last 18 months or so, we've been having a lot of events around AI. We're right next to Georgia Tech, maybe 10, 15 minutes away. So there's been a lot of noise around AI over the past 18 months, specifically in the Atlanta tech ecosystem. And Georgia Tech has done a lot in terms of just investing in curricula for AI students. And so when we kept having these events around AI, the market sort of started rebounding in 2024. So I started evaluating or researching, what the next opportunities in crypto could be, great places to build. At first, I came up with an idea to snipe tokens, right? So whenever someone comes out with a token, we would be one of the first to identify it. They would post it on Telegram or Twitter, and my bot would effectively be one of the first ones to detect it. But then I realized, from my experience running, the number one launch pad in the last cycle by ROI, is that we understood the life cycle of a token. We launched over 100 tokens in the last cycle. We held 63 IDOs. So I understand the tech and all of the inner workings of launching a token. I built some anti-bot tech way back, 4 or 5 years ago that's common today. So a lot of the tech that you see, launch pads, pump fund, all these things, this is tech that we've implemented a long time ago. And so realizing that there's so many tokens that are being created every single day that it's very difficult for the average person to identify the good tokens over the bad ones, which ones are scams, we could go down the list of, the pros and cons of token investment. I started pivoting my Telegram bot product from something that would identify new opportunities into a set of AI agents that could identify these opportunities. And back in October 2024, I doubled down and started focusing 100% on this venture. And the concept that I came up with was very simple. It was, we have a pro-crypto president, and we do a lot of things in politics. We go to DC, talk to Congress about crypto as part of the standard crypto ecosystem. We have a pro-crypto president. Congress just passed the Genius Act. They're talking about constant regulations, and that just means, tokenization is now widely accepted in the United States, right? One of the reasons why I was developing anonymously back in the last cycle was because I was fearful of the government coming after me for building a token launchpad and doing so many token sales being based in the United States. So we had to set up international entity and all of the legal processes that ensues. But there's so many signs that makes people that are based in the United States confident to launch a token. Well, it makes it difficult for people who want to invest in tokens, because now you can create a token. You can create a token. Every celebrity has attempted to create a token, right? Larry Fink is saying on national television that everything's going to be tokenized. So the future is tokenization. But it leaves the average person, that doesn't really have the experience in blockchain and crypto like we do to understand how to navigate this space. And that's what AI Quant effectively, at least the first problem that we're trying to solve, is a set of AI agents that understands how to navigate crypto like we do, right? We know that if there's an opportunity, if you're launching a token, that you're gonna launch it on Uniswap, you're gonna create an LP, you're gonna probably pair it with ETH with a certain amount of liquidity, you're gonna have snipers coming after you, you're gonna get KOLs involved to promote it, you're gonna have Telegram groups promoting it. We understand the entire life cycle. So what if we instead educate agents, AI, with that same knowledge so that they could understand the life cycle of a token launch? And suddenly, my theory is that they're gonna be able to trade much better than we can. New opportunities, existing opportunities, the whole gamut. And we're the first to do this. So we've created a product that allows anyone to create an AI agent that we're calling AI Quants, right? And for those of you who understand quantitative finance in the room, quants are the sort of the geeks of Wall Street, right? They're the ones who crunch all the math and do all of the analytics to sort of predict where they think the best investments are going to be for the companies that they work for. So that's exactly what our agents are doing. So, they understand how to find tokens. They understand, they take them through sort of like a 3-phase process. The first of which is a fundamental analysis. Once the token is detected, we do a security analysis on the token. So we know whether it's a honeypot, which means that there's code inside of the token that tricks you to invest, but you can't get your money out, right? We know whether there's no liquidity, so the liquidity is not locked, which means if you invest in the token, the liquidity isn't locked, they could rug pull you by extracting all of the liquidity out of the pool, right? So these are things that we know in depth from experience, and now our agents know how to do the same thing. And so after the security scan is done, we run technical analysis against the tokens. And this is something that, it took me the past 9 months to really get into the depth of it, because it could be so complicated. But the RSI, MACD, Bollinger Bands, the technical analysis that most advanced traders are aware of, our agents now understand the same thing. So they run technical analysis against the tokens, and that effectively just helps predict whether a token is going to do well over the next 5 minutes, 5 days, 5 months, etc., to help them make better decisions or help inform their decisions for the trade. So security checks, technical analysis. We do social analysis. We partnered with the #1 social provider who just tweeted about our launch last week called Luna Crush. So if you go to Luna Crush, you'll see that they provide a lot of social sentiment about every single token in existence. So it tells you effectively, that Eric just launched the token and now 100 people are on Twitter talking about it. This KOL retweeted it. There's so
Going to the moon.
Going to the moon, exactly. And Luna Crush understands the sentiment of the social component of the token. So we've partnered with them, and they're providing our agents with the social analytics to inform their intelligence and their decision making for the trade. So again, security, technical analysis, and now we have social sentiment. But then we also have a macro view. So we feed the agents, whether it's BTC dominance, what's the fear and greed index of the market? What's the alt season index? What's the stablecoin dominance, the ETH dominance, right? What's the market regime? So overall, what's the macroeconomic climate for the ecosystem? Because they need to understand that in order for them to make better trading decisions, right? Now, once we take the tokens through this very advanced filter, we then allow you, the creator, to put in your strategy, and our agents sort of checks against whether your strategy matches with some of the things that are detected. So for example, if you like tokens that are young, just a few hours old, so new tokens that were just discovered, right? You tell your quant that. Say, hey, I'm only interested in brand new tokens that just launched this morning, right? Or I'm interested in tokens that are this market cap, million market cap. Maybe you're not that risky. So, million market cap to 10 million market cap, right? You tell it that if it does a security scan, you're okay with the score being 60%, not 100%. So you get to decide and tweak some of the strategies that it applies once it does all of this analysis. And then ultimately, it will make a decision on buying or selling the token on your behalf. But it's not a simple decision, because before it makes a decision, we were just accepted into the Google Clouds, the Google for Startups program, and they gave us a $200,000 grant.
Congrats.
So,
Wow.
thank you. We have to spend it on the infrastructure. We've been using different models, OpenAI, so forth, and we landed on Gemini 2.5 Pro because it's extremely good at crunching very large data sets. So the last part of what the quants execute is sort of this detailed strategic entry and exit method, which means before they go into the trade, right? This is where we leverage a lot of the models like Gemini, OpenAI. Before it goes into the trade, we look at if the quants traded in the past, we look at the past 150 trades that were profitable, past 150 that were unprofitable. We analyze the similarities from the profitable trades, similarities, unprofitable trades, and we try to find trends to see with this token that we're going to invest in now, or that we're thinking of investing in, which characteristics does it sort of lean towards, right? The profitable trades, unprofitable trades, and we put that into the model with the past 90 days worth of price data. But we break it down into different intervals because it's a very, very large data set, and come up with an entry strategy. Entry strategy says something like this. The price of the token is $1. You should get in, based on all of this data and all of the things I just described, you should wait 2 hours and get in about 95 to 97 cents. And if you can get that entry, you capture it. Now once you capture that entry, now here's the exit strategy, right? So you should take profit. If it goes up 20%, you sell 50%. The other 50%, you wait until it goes up another 20% and you exit another 30%. And the same thing holds true for exiting at a stop loss. So if the price goes down by a certain number, we know to sell a certain amount, right? So it's a very sophisticated entry and exit strategy when it's performing, these quants are performing these trades. And so, you combine all of this intelligence, right? One, AI agents that can go to any blockchain. We're supporting Solana-based and BNB chain because that's where most of the volume is, but we can support literally any chain. So AI agents who can detect tokens on any chain. That means you really can't miss an opportunity. If you go into the system now and you go to an external platform that shows new tokens that are being discovered, copy and paste the contract address, put it in AI Quant, it's already in there, right? So the quants are detecting new tokens the minute they're created. So just, that means we know of every opportunity that's coming out on the blockchains that we support. And then we take it through this very, very detailed fundamental analysis where we get the security checks, we get the market analysis, we do technical analysis, which is something that's usually reserved for advanced traders. We use very sophisticated, we match it to your parameters and filter it based on your strategy, and then we use these very sophisticated models to come up with entry and exit strategies. This is all happening, everything I just said over the past 10 minutes, this is happening in seconds. It's happening in seconds. Every single thing I just described. So imagine, as we speak right now, this is what's happening. We have 60 quants in the system. They've traded over $22 million in volume. There were periods, we went through a massive migration when we got accepted into Google infrastructure. So the past 2 months was mostly focused on infrastructure. But prior to that, we had quants with half of them were outperforming the market. We have a pretty solid business model because, again, I told Michael we're going to be the highest revenue generating company in the history of BitAngels. Maybe not Ethereum, but we're going to get very close. And so we came up with a very.
They didn't have any equity.
Didn't have equity. And we came up with a very very straightforward business model. One is every quant that's created is 0.1 ETH, right? So that means for every 10 users, we make 1 ETH in revenue. It's about $4,500, $4,300 today, just from onboarding, right? So if when we onboard 1,000 quants into the platform, that's 100 ETH in revenue. We onboard 10,000 users, that's 1,000 ETH in revenue. We onboard 100,000 users, that's 10,000 ETH in revenue. And suddenly we get ourselves in a position where we're becoming an ETH version of MicroStrategy because we're holding tens of thousands of ETH in revenue. And this is only from creating quants, right? This is only from convincing 100,000 people to create a quant.
Convinced?
Right? But of course, that gives them sort of what we call the lifetime access to the quant platform. That one-time fee, you have your quant forever. It's not a solid business model alone because we do have consumption and resources that we need to cover. And so there's an ongoing 10% performance fee only on profitable trades. So every trade that your quant executes, we take a 10% fee if it's profitable. So if you make $100, we get $10 to our treasury wallet automatically. So imagine a very high volume platform where there are hundreds, thousands of quants constantly evaluating, doing everything I just described in the past 10 minutes, doing that in seconds, making trading decisions, making profitable trades. We get 10% of every profitable trade. And we've estimated that could result in anywhere from $200 to $400 million in revenue just from roughly 100,000 or 10,000 quants or so. And so on top of that, coming from the I guess the degen world in blockchain, we realized that tokenization is very important in this world. And so of course we're gonna have the AIQ token as well. This is the third aspect to the AI Quant platform. With the AIQ token, you stake a certain amount and that will result in you getting a percentage of the performance fee revenue, right? And you know, there's a referral system as well where you refer a certain number of people, you stake your AIQ based on the stake amount, you receive USDC in your wallet from our trading performance. We are also going to release tokenized quants. How many of you are familiar with Pump Fund? Okay, great. And virtuals. How many of you? Awesome. And so the tokenized version of AI Quant allows you to bypass the upfront fee. You don't need to pay the 1.1 fee. Instead, you create your token. You launch a quant and you tokenize it, right? And it's actually a token that backs it. So for example, if I wanted to create a bar chef quant, which is my now doc's name, I guess, I would go to the system, create bar chef as a quant, and maybe use the chef token, and AI Quant would automatically create the chef token on base with $1 billion. I'm sorry, it's stuck in my head. I'm sorry. I'm just programmed to think in $1 billion. With a billion token supply, right? And then I go to my community and say, hey guys, I just created a quant in AI Quant. I need you to come and support me. And that way I can unlock my quant. So I need you to buy into the chef token to the point where I can reach, you know, we'll adjust it, but say 100,000 market cap for my tokens, and then it unlocks a full quant. So it's a virtuals model, but you need AIQ in order to be able to create that, right? So there's other various utilities, but I think the tokenized quant, you know, they stake in for percentage of revenue and referral fees are some of the core utilities of the platform. And so, you know, again, we've always sort of been early into things that we build, and like Michael knows, this is not my favorite part of the job. It's not presenting, but I have to do it, and I actually started to like it a bit. It's really being behind the scenes building products and people not really knowing that I'm behind some of the things that have been built. That's my favorite place to be. I live in the software world. I try to think about what's coming next. I've been, you know, pretty accurate so far, even from the healthcare space. Before George Bush announced in 2004, I remember this like it was yesterday, that the country needs an ONCHIT, which is the Office for the National Coordinator for Health Information Technology, right? He announced that in 2004. Every American should have a medical records. I was already building it a year before that. And then again, it got acquired 2008. But it's, you know, we see the same opportunity here with the intersection of AI and crypto, right? And the reason that we're the right people for the job is because we understand the life cycle of a token. We've launched over 100 tokens, right? We know the token business very, very well. That's how we made our money. And so, you know, if we take all of our knowledge, we feed it into AI, and we think that we could come up with a very amazing unicorn in the making.
Talk a little bit about being able to buy into someone else's strategy too.
Oh yeah. And there are a lot of features within the platform where if you see that I'm performing well, you could actually send me an offer in USDC to say, hey Marlon, you know, here's $500, and it's sort of like a bid marketplace to copy your strategy. And it could be an ongoing sort of subscription or a one-time fee, right? So we have that.
And of course, the company takes a piece of that.
Right, of course, yeah, we did it for you for that as well, yeah. And then, you know, Michael invested, he's been a supporter, and he's the chairman as well. So I think, you know, you guys certainly should pay attention over the next year, what's happening with AI Quant. We raised over $1 million. There's still, you know, opportunity if anyone wants to get in. You know, we
It's a short fuse because of your
TGE.
TGE, yes.
Token sale is next Tuesday. And again, coming from a launch pad, so we've got, you know, a ton of activity lined up. Some of it's actually starting now. You know, the marketing sort of kicked into gear. You know, we're probably gonna raise, you know, over $1 million for that. And,
But the liquidity right now goes to those who are the equity investors. It's a $30 million market cap
Yeah.
for equity, but it's 1-to-1 free airdrop,
Right.
which means that you can think of it as being 15 for the equity and 15 for the token in your head if you want to look at that that way. The nice thing from both the company's perspective and the user's perspective is by investing in equity, first of all, the company doesn't have any tax hit. They actually get a net operating loss. And then the airdrop means that you don't have to go and you know, count it as revenue because it's worth pretty much 0 or 0.000001 for the token because it's not doing anything yet. And then obviously they both have upside. I mean, what excites me about it is that you know, we were running the math on the lower end of those numbers of what the I mean, we have several months now of paper trading, and the numbers were kind of crazy. You were making like $20,000 on an annualized basis in fees,
Right, yeah.
but we figured, okay, maybe that's like high because maybe people aren't going to be as aggressive, you know, rolling their profits back in because you only started people with like $10,000
Right,
too.
yeah.
And some people may come up higher once they start working, but you know, on a very conservative model of like $4,000 per user per year, so on top of that 0.1 ETH, 1,000 users gets us $4 million in revenue, and our operating costs are significantly lower than that.
Yeah.
10,000 users gets us $40 million. How many startups do you know that do $40 million the first year? Right? And we think
I'm clapping to that.
we think second year we could do 100,000 users. And you know, Marlon's been obsessed. You know, the last couple of months I was like, when are we gonna go live? It's like I'm still building the back end. He's obsessed with the back end. The back end now can scale to 1 million simultaneous users, and 100,000 users, which is a tenth of capacity, gets you 400 million a year in revenue. Which is, and that's not including any of the things from, you know, the copy trading and anything else. I mean, that's like a decacorn.
Right.
And so that's what excites me. I think that's what excites Marlon. And you know, we've got about a week left to get in at that rate, and then you also get a 1-to-1 airdrop, which this is unheard of other than in Pudgy Penguins. No lockups. You can sell everything day one if you want,
Yeah.
which you'll probably regret later.
Marlon, I have two
Yeah.
questions,
Sure.
and I'll ask them simultaneously. The first question is, how does a quant do with the top 20 tokens that are already, the top 20 market cap tokens that are already in existence? How do you think the quant will do with that? I'm assuming the same. And then the second question is the quant reading the degen wallets that are in tokens early or launch tokens like the Millet token, the Yeezy token, and using that as part of the quant strategy to kind of really spot those anomalies and those first movers who are manipulating all this crap?
Yeah, those are great questions. So the first question, we're focused on the DEX economy, right? So a lot of the top tokens aren't on DEXs. If they are, they're certainly part of the fold, right? But there's 225 million unique traders in crypto on chain, DEX, not centralized exchanges like Binance, Coinbase, and others. I'm talking about where AI Quant's target market lives. So there's 225 million of those guys. All we need to do is capture 100,000 of them, and you know, the numbers and predictions that we have would
Make us a decacorn.
would make us a decacorn. So, short answer, If those tokens are on-chain and trading on DEXs, AI Quant will pick them up. And based on your strategy, it will determine whether or not they trade them. So for example, if you're only interested in tokens from 1 million market cap to 5 million, it's going to exclude them. But if you're interested in tokens that are larger market cap, then it will include them. Right? As long as they're available on DEXs, that's where we're focused, is on the on-chain economy. And I think even Coinbase, Binance, and some of these large sexes realize that on-chain trading is where a lot of the market is. So Coinbase just released DEX trading in their platform a few weeks ago. Binance did the same thing. And so...
You've been traveling around the country with the base team.
Right. Yeah, absolutely. And we have a great, very, very close relationship with them. Stanford Crypto, the chapter president, George is here, and but so the second question, what was your second question?
Well, the social metrics that you're doing is fantastic and necessary. Are those social metrics or the quant also accounting for those early wallets or users that are getting into these tokens, especially these meme tokens early, and that are essentially controlling the project? So you guys able to spot those trends?
So I haven't found a reliable data source for detecting sort of the repeat offenders,
Right. Well said.
in these launches. But what we do is we take, because it's all about data and how much we can compile to help make accurate decisions. So we do go on-chain and we look at the unique wallet growth of the token. So how many new wallets got into this token? Not particularly whether they're well wallets or not, but how many new wallets purchased this token over the past 30 minutes, past hour, the past 4 hours, etc. So we can tell over time that there's a certain number of new entrants into the token, which is a positive sign. We do look at the overall distribution of the token. So we take the token supply, we grab all of the holders, and we look at the top 10 wallets, and then do an analysis on the percentage of supply owned by the top 10. Because if only 10 wallets control 50% of your supply, it's a bad distribution, right? And so the quants understand that. So we do on-chain analytics from that perspective, but it's, I haven't found a very reputable data source for, the bad offenders and other than a few tweets, that we can feed the quants constantly. But that's something I've been looking into.
Like bubble maps. Doesn't bubble maps kind of like?
I don't think bubble maps. I don't know. I have to really look into it. I don't think bubble maps. And you tell me if I'm missing something. Addresses the specifics of like the dumpers in crypto, right? Because we're trading across chains. Bubble maps is tied to a specific wallet address, right? So how do you identify Marlin as a bad actor on Solana, and then on Base, in a very predictable way, is what I'm saying.
A lot of the meme tokens, it's like Monday morning quarterbacking, where all the analysis comes back after the scams or after the rug pull happened.
Yeah.
And if your quant can detect that while it's happening to provide that data and implement that into trading strategies, invaluable.
Yeah, absolutely. I mean, we're just gonna keep getting better, guys. Look, it's been building for almost, October's gonna be a year already, Michael. We like to, before we do tokens or we launch anything, we like to actually have a working product, something people can see that's working. We're not white paper only guys, right? And so I say that to say that there's so many different data sets that we are looking at. We're looking at X stocks, as Michael knows. Just I think yesterday or today, NASDAQ said that they're going to the SEC to get stocks tokenized, so we could be getting completely.
It's already on Solana.
It's already
And
X stocks.
you
on
can
Solana.
go and use your platform to go and trade stocks.
Yeah. And so there's so many opportunities. We need reliable data, and that's always the key. Once we have that, then the rest is history. Yeah, sorry, you had a question?
Oh, yeah, so I have 3 questions. So is it going to be an app that can be integrated with Open API with like Gemini and Coinbase, so it's autopilot? That's my first question. Second question, what's the minimum amount of investment? Is it, do the investor get equity or token or hybrid? And if you
Sure.
have no lockup period, isn't there a risk of lock-in?
So the minimum investment, I think we said was $30,000, and you get a one-to-one airdrop and no lockup. I mean, that's very rare in this world. The only one, and I was supportive of this too, because if you remember in 2017 when you had like crazy returns, there was no lockups. And it didn't hurt them then, so I don't know why everybody thinks they need 8-year lockups now. Because the problem with lockups this late in the cycle, and I'll talk about that next when I talk about my book and about the fund, is that we're probably within the last 3 months of the cycle. And so that means if all of a sudden you buy something next week and you have a 18-month, 24-month lockup with a 1-year cliff, you're guaranteed that you're selling in the bear market, or you have to hold on for another 4 years and hope that the company and the token survive. I'm confident that in this case it will, because it has a real revenue model, a substantial one. But if you look at Pudgy Penguins, they kind of followed the 2017 model, and they said, you have a Pudgy Penguin, we're going to airdrop you Pengu tokens that went out at a market cap way beyond what you paid for your Pudgy Penguin. And they said no lockup. And so a whole bunch of people sold day one, price went down a little bit, rebounded, and now it's trading higher. And so you basically flush out the paper hands, and good riddance. I mean, when you're confident about your token's long-term performance, you don't mind having people, the problem is that a lot of times tokens that have very minimal reason to be, they want you to stop selling for a long time because they're afraid that there's no buyers coming up. Here, the nice thing too is that you can stake the token for basically part of the performance fees.
Right.
And so that's a reason, just like with Tau, you never see Tau crash because 90% of it's staked. There's a number of other tokens that have that model, and we think that we'll be one of them.
I missed it, I must have missed it. What's the supply?
1 billion.
Okay.
That's the token. Again, the token is not for sale. Basically, there's 10% of the token supply is going to be going to the equity holders, presuming that we sell out the entire 3 million. If not, it'll be less.
And what part of that goes to liquidity?
Well, that's a separate allocation. That's the TGE. So there's an equity opportunity, but then we're also going to launch the token on the market, and roughly 1% of that should go into liquidity. We're working that out with the market makers.
Is it a fair launch?
No. It's unfair because we control supply, and that's by design, right? We didn't want to just have a token out in the market that anyone
It's not a meme
had a
coin.
very large percentage of, right? Yeah. So there's over 40% of the allocation just in the treasury that's going to be locked away, but available for use.
So I know you and I talked about the upcoming world IPO on Thursday, and how that affected other Bitcoin, Ethereum treasury companies, including Tom Lee's BitMine. So in this case, if you're investing in equity, how would that, if eventually if you do an IPO or if you have a later stage company later on, how is the trading dynamics of the equity going to be related to you're talking about you're going to have a treasury built up?
This is not a treasury company.
Okay.
Right.
And obviously, the market cap right now is 30 million. And if there was ever IPO considerations, it would be a huge exit for everybody. But I don't think it's going to be an IPO. It's not a treasury company. It's probably going to be just a very profitable company that continues to give dividends for the foreseeable future, or get an offer from somebody big that we can't refuse, it'll be an exit.
Right. Yeah, definitely, I agree. It's gonna be one of those two. Look, Pump Fund did over 700 million in revenue in 12
first year, right?
Yeah, 12-month period. We think, it's proven that crypto companies can scale very fast in terms of revenue at a scale that we haven't really seen before in Web 2. And so the upside here is getting into a high revenue generating opportunity that could potentially print dividends or get acquired in the long term. But an IPO, we go on the public. I mean, we're not anarchists, but I wouldn't necessarily want to see AI Quant trading on the stock market. It would be a good thing, right, Michael? But
I'm open. I think honestly that you get taken out by, look, Coinbase paid, I think, $2.5 billion for Deribit, and if you're making 400 million in revenue with 70 or 80% profit, I think you'd get a comfortable offer. Probably time for me to now move on.
It's going back to
She's
like
giving
the
Marlon a
traditional
hooker.
trading.
She's doing it for me. Pretty interesting.
Absolutely. Thank you so very much, Marlon. And if you have questions, ask Marlon. Also, if you happen to have registered, you will receive information later. If you did not register, make certain you register so you can get the details.
Thank you, Michael. Thank
Okay,
you, Joyce.
thank you.
You're welcome.
Thank you guys for listening.
Okay. So again, I'm very bullish on this project, and so that's why I brought Marlon down.